All right, guys, Sam here. Now we're again mid-morning, November 21st. Good day to take a look at our old friend Ethereum, which is starting to get some traction. We're heading back towards our previous highs. It has been really just stuck in a range for the last couple of months, really. It remains very technical. So it's some very tricky Elliott wave structure here that maybe beyond this video. It's the kind of thing we go through in the room amongst members. So you learn how to qualify and quantify this count, such as we have it here, so that it works and that you don't violate any Elliott wave rules. And I think we have the count as it is. Now, of course, any count is subject to relabeling per the price action. But I think we've got a count here that works. Now you can a couple of things to show you is, of course, whenever you see a 5-wave structure like this where you just can't help but miss it, right? So, I mean, it's just absolutely textbook. Here's our wave 1. The wave 4 doesn't overlap it. Again, that doesn't happen by accident. You start looking at that going, well, okay, is it trading technically? Well, here's one that I show you very often, just a great example of it. So there's the length of wave 1 projected from our wave 4, and we go to the 100 to the tick, right? So very common for a 5th wave to top. In fact, if you saw the earlier video on Bitcoin, very common for a 5th to top in that relationship, 100% of the length of the one wave topping out at the 5th. So interestingly, it looks like we're coming up here potentially for a double top, or we're going to get through it and we're off to new highs. So pulling that off, knowing that it continues to trade technically, it's gotten very difficult here. This is a really tricky count. But as we have it here, some things that we can rely on regardless of the intricacies of the Elliott wave count structure here. We can look at simply working from swing low to swing high, and we double bottomed at the 50. So we hit it once, then hit it again. So I think that's a reasonable labeling here for a 4th. And part of the reason that I am qualifying that as a 4th, as you can see here, as I've labeled the one wave here in blue, you can see that perfect tap here, not to overlap it, but just touches it without going through it. That does not happen randomly. So here, in conjunction with the algo buying at the 50 and not violating this wave 1 high, I think high probability that we've got a 4th wave in here. So given that count, there's our 1, our 2, 3, 4 going up for the 5th. Well, if we just again do some projecting, and I'm going to take swing low to this high, projecting it from our 4th. Well, we're sitting here now at the 618. Right, that's always one to consider. I'm going to do it a little bit different. So we know we're potentially close to a topping action. We've got our negative 23.6. That's the algo target, right in sync with the median line, so a likely target. So let me pull some of this off, and we can look again. So if I go from the length of my one wave, projected from my 4th, well, so here I've got the 1618, so another contender. So you start putting these together like this, and given our algo target here, there's our 50. So we get an absolute perfect overlap of the 1618 of the wave 1 projected from the wave 4 in sync with the negative 23, which is our algo target, gives me a high probability that we're likely to, at the very least, get a reaction here. So I'd be very surprised if we don't make it up here to these targets, wick the median line, and at least see a reaction to that. Now, as to whether or not that tops there, remains to be seen. But be interesting to see what happens when we get back up to these prior levels up here. Are we going to pause and then blow through? Are we going to retrace, which I think is more likely? So if we look at a completed structure here, a retracement, even if I know it gets, there's a lot of lines on here, but if we're going to come up to that, here's our edge here of the pitchfork. Here's the 38. Here's the 50. So potentially your next opportunity to be a buyer would be down here at this edge. But then if indeed, keep in mind that if I go Now let me pull this all off just so to declutter the chart. If we make the assumption that we're completing a 5-wave structure, well now, given that it's complete, we're looking for a retracement of the entire move, which potentially puts us back down here at 293. So that would be your 50% of this completed in blue here, this 1, 2, 3, 4, 5. So potentially, you're looking for a reaction here. Remains to be seen, because of course we could be relabeling. This could all just be a wave to a larger degree. But I think that this is high probability here that we're going to see a reaction. As to how deep we get a correction, assuming we get one, remains to be seen, but I would certainly be interested in seeing this move into a 3-wave corrective structure, looking for the next opportunity to be long. All right, so that's our 4-hour. Let's take it down to the 1 hour. We can get a closer look at it, where you've got some subdivision here that helps you with this, so you can see this cluster here. I've recreated it here. But coming into this, we're getting an ending diagonal. So here was our 1, our 2, our very deep 4. So clearly now in a diagonal, and then we're getting a diagonal. We're getting an ending diagonal within an ending diagonal. So even within that diagonal, now we're finishing with an impulse. So take a look here. So in blue, we've got thus these trend lines. So here's the diagonal in blue. 3, 4, looking for the 5th up here. Here would be the top of that structure. Now within that, as we go into our 5th wave, we're getting an extension. So we get a diagonal within the 5th wave. So remember, we can only find a diagonal in a 1 wave, an A wave, or a 5th wave. So in the blue wave, in the blue degree, we're in our 5th wave. Within that 5th wave, we've got subdivision here into 5, creating an ending diagonal in the 5th of our ending diagonal. I know it's harder to describe it than it is to see it. So within that ending diagonal, we get here in white a 1, 2, 3. We overlap the 1, so thus a diagonal. And then now we're finishing that with a 5th wave impulse, because we've got a 1, 2, 3. Here's our 4. We don't overlap the 1. So we stay in an impulsive structure and likely putting in a 5th up here. So here it is in green. So all of this creating a confluence zone here, not to mention the market geometry with just a simple trend line on this upslope here, which we've hit 1, 2, 3. Would not surprise me if we hit it a 5th time here. And then potentially we're looking for a completed structure and the next opportunity to be long, if we're going to hit that. So once we have the box, then we know it's there, we know it's significant, then we can look at this as a completed structure. And if we pull on the assumption that we top here, then our next opportunity to be a buyer, because we'd be assuming that we'd be completing and looking for a 2-wave in a new structure. So we don't want to buy at the 38. That's low probability for a 2nd wave. Our buy zone would be down here at the 50, looking for new highs, right? Stop under the 65. So that's kind of what we're watching for here. Remains to be seen. We've got to determine that we've got a top in. And then once we get that, we'll look for the next 50, right? With lots of upside here. So, even off of that 50, then the next pull puts it up here. That's 395. All right. So that's off the 1 hour. All right. So the detail of this, that's all the kind of things that I teach you, as a member. And this is very tricky. But you define it through the fib structure, right? So it's always fibs first. So what we do, with the uniqueness of what I'm teaching you, is that I'm combining the algo patterns that we see repeating over and over again in every market. And if you think of that, that's the dominant structure. With the Elliott wave, we're just trying to get in and sort of surf behind the big wave that the algos are creating. And it allows us to kind of dart in and around what they're doing on the larger degree, so that we're not taking this gigantic risk that like they will, because they're working off of the daily, the 4-hour, the hourly, and the 15 minutes. So when we're looking for reasonable risk reward for the average trader, it's this combination of the algo structure and then building in around it and weaving around that the Elliott wave count so that we can find lower risk but with high probability entries within that larger algo structure. That's really what I teach you. All right, guys. Okay, let's wrap it there, and perhaps we'll be back with a look at Litecoin.